You're in trouble, or at least that's what you think. A sales tax notice from the state may not be as ominous as you think, and the one that actually is often looks the most boring. We manage these notices for clients every week, and today I'm walking you through the 4 types you might get and how to tell which one actually needs you to act. Now this sounds obvious, but it's worth saying out loud. Before reacting, read the notice in full. We hear from sellers regularly who are genuinely stressed about a notice they receive. And when we ask what it says, it turns out they haven't actually read it all the way through. The envelope alone is enough to trigger anxiety, and a lot of people forward it along or file it away without fully understanding what they're actually looking at. Different types of notices require completely different responses. Some require no action at all, some have deadlines, some need to go straight to a professional. None of that becomes clear until the notice is read carefully from top to bottom, including the fine print. So before anything else, open it, read it, and then figure out what you're dealing with. Now for the 4 types. The least alarming type is the informational notice. These are communications the state sends out to registered sellers about updates that may or may not affect how you file. Common examples include sales tax rate changes, updates to filing procedures, new form requirements, or general Department of Revenue announcements. In many cases, these notices are simply good to know. File them away and move on. That said, some informational notices do require a response or an update to how tax is being calculated or collected. A rate change, for example, may require an update to whatever system is being used to calculate sales tax on orders. Reading through it carefully is the only way to know whether action is needed. The second type is a notice of assessment. And it is a different situation entirely, and this is one to take seriously. These notices are typically issued when a seller has returns that are past due or a payment that failed to process. The state will include an amount that they say is owed, and this is the part that's important to understand. That number is an estimate. The state doesn't have your actual sales data at this point. They're making an educated guess about what they think you owe, and that guess tends to be in their favor. So the amount listed on a notice of assessment is often not the amount that will actually be due once accurate returns are filed. The right path forward is to file the outstanding return periods with the correct sales data, calculate the accurate amount, which will include penalties and interest, and pay that. Not the state's estimated number, but the accurate one based on actual sales. Third is a filing frequency change notice, and it is exactly what it sounds like. The state is adjusting how often returns need to be filed. These notices tend to arrive mid-year or at the end of the year, and they're triggered by changes in sales volume. The state may be moving a seller from quarterly filing to monthly or from monthly to annual. On its own, this notice isn't alarming, but ignoring it absolutely can be. If a seller is supposed to switch to monthly filing and doesn't, they can accumulate penalties and interest across multiple unfiled periods before realizing anything went wrong. The action here is simple. Pass the notice along immediately to whoever is handling sales tax filings so frequency can be adjusted on their end. This is one where the notice itself isn't the problem, missing it is. And the final category is the one that warrants the most caution. A notice of audit, or its frequent precursor, a sales tax nexus questionnaire, is not one to handle alone. A nexus questionnaire from a state is often the first signal that an audit may be on the horizon. The state is asking questions about your business activity in their state, and how those questions get answered matters. This is one where reaching out to a sales tax professional before responding is strongly advised. The way these questionnaires and audit-related notices are handled can have a meaningful impact on where things go from there. Having someone in your corner who knows how to correspond with the state and what to say and what not to say is genuinely worth it. This can also make a big difference when it comes to handling missed filing. What do you do when that happens? Well, to find out, check out this video. And remember, when in doubt, always consult with a sales tax professional.